Hello everybody, it's Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to have a look at a nice trade setup that unfolded on the NQ on Friday. But as usual, let's start with our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept that losses can and will and do unfold. It doesn't matter what trading approach you take, there always will be losing trades. Let's go back and have a look at the 3-minute chart on the NQ, in particular this DP buy coming in at the low on Friday. For you who are new to MTPredictor, we don't just take all our signals as if it's a black box system, perhaps in the direction of our MTP trend color. The reason we don't do that is we know and understand that markets are basically random half the time. So just over half the time you shouldn't be doing any trading because the market pattern is not clear. So obviously the question then asks, how do we decide when the market's clear or the picture's clear? For this we go to the higher time frame chart. If you're on a 3-minute chart, you'd go out to the 15-minute chart. If you're, say, trading on a daily chart, you'd go out to the weekly. If you're, say, trading on the hourly forex, you'd maybe go out to a 4-hourly chart. So this low here is where we had a DP buy on the 3-minute chart. So I'm just going to use the bar replay in trading view and just go back to before the market even got there, just to show how we place our DP levels on the chart in advance. It's important because these are leading indicators. So I'll just use this and use our last pivot there. See, there's the last pivot. So I'm going to go off the last pivot and draw a DP on. Can you see how it's on the chart there? But the most important thing, it's on the chart in advance before the market even got down there. You see, as we go forward, the market is not even there yet, so it's anticipating in advance. So what I'm going to do is I'm just going to put a box around that, just so it stays on the chart when we go back to our 3-minute chart. Perhaps I'll put in some text, say to just so it's clear what it is, and I'm going to lock it. See that padlock? I'm going to lock it so it doesn't move. I can now turn the DP off on that time frame because we don't want it to recalculate when we come down to a 3-minute chart. But that's the point, it's on the chart there in advance. So I'm just going to turn training mode off. And as you can see, it came down there and look how it caught the low. This is what we're looking for, to see what the market does what we anticipate. In other words, we place the support or resistance down there in advance and we see if the market does indeed do what we anticipate. So how is that going to help us on the 3-minute chart? Well, if we go back to the 3-minute chart, can you see how now when the market came down into that 15-minute support, can you see how we got a 3-minute trade set up on the 15-minute support? In other words, the market was doing what we anticipate on the higher time frame when we got a trade set up on the lower time frame. In other words, the things were coming together. So this is why this would be a good trade setup to take. Let's now place the analysis on this particular point in time. So I'm just going to click on our trade setups because the DP is a standard trade setup. How do we know what bar low that is? Well, I'm just going to display the pivot label so you can place the analysis on any pivot label, and you can see that was 599, so that was bar 600, sorry, that's pivot low 600. So I'm just going to place 600 in there and say we calculate on pivot number 600. There it is, it's actually on the very bar of the low. So I'm going to change the offset to 0. So in other words, we're calculating on the bar of the low. If that had been 1 bar later, we'd have been able to do our offset to 1. So we can now do tick analyze setup, and this will then place our analysis on that bar there. Just turn the pivots off, labels off, so it just clears the chart up a little bit. Just wait till it recalculates. There it is. And here you can see our trade setup comes in. Remember, we take account of position sizing to keep our initial risk small and under control, so that allowed you to get a long trade set up off here going up into that first target. But the interesting thing here is if I now do the Elliott waves on this low. And again, we know that's pivot 600. So can you see how this actually is a 5-wave sequence going down to the low? Can you see that? 1, 2, 3, 4, 5. So this is a 5-wave sequence down to the low. Now the thing about 5-wave sequences is if it goes back to the DP of the prior wave 4, which it did there, it then can go, if it goes past that, which it did, it can then go to the DP of the start of the sequence. And interesting enough is if I come back to the 15-minute chart, just take that off, so I don't want that to recalculate. And I don't want it to redo the analysis there. But if I come back to the 15-minute chart, I want to place a DP off that last 15-minute high. So I'm going to do exactly the same as I did last time. Let's see what pivot that is. That is pivot 42. So I'm now going to do a DP off pivot 42. Can you see how it comes into the high there? Remember, that would have been on the chart in advance. So as the market starts to go up, this level would have been on the chart in advance. I'm going to add a rectangle to that as well. I'm going to lock that one. Let's see what difference that makes now when we go back to our shorter time frame with our trade setup. So let's go back to our 3-minute chart. So here's the difference you see now. So this would have been 15-minute support. I'll just put a label into that. That would have been 15-minute resistance. So in other words, this would have been the higher time frame resistance. So when we actually place a analysis on the low here, rather than coming out at the first target, we could perhaps look to come out a bit higher target, perhaps around 12. What's the price there? It's at 12,377. Oops, it's gone a bit high there. So rather than coming out at the first target there, you may want to run the trade up into the 15-minute resistance to increase your profits a little bit more. So a good example of using MTPredictor, our MTPredictor scripts on TradingView, and can you see how we managed to anticipate in advance the 15-minute support level there that came in and caught the low, and how we had then the shorter term buy setup that came in at the 15-minute support. The initial trade setup was into that small high there for a profit that was approximately 3R, just under that, 2.9R, so that was a nice trade. Remember, we use position sizing to keep our initial risk small, so when the losses come through, and they will do, they kept small in relation to the profits, but also put the higher time frame resistance area on the target on the chart there as well. So if you're a more experienced trader, you might want to let the trade run and run up into that 15-minute resistance to increase your profit a little bit more, to have a slightly larger profitable trade rather than just your first target coming in at the higher time frame resistance. So a good example of MTPredictor trade setups unfolding last Friday using our TradingView scripts.